I know you guys are early, so let's take the time. If you have any questions about the first two sessions, I know in the first session we talked about the prop firms and cash accounts. In the second session, we talked about trading plans and also indicators. But if you have any questions, just definitely take this time to ask them before we get started. So it's like free time.
Yeah, well, how about everybody here? Did you guys, obviously this is class 3. Have you guys already gone through the first two classes, whether it was live or watching the recorded session? Have you guys done that so far? Jingling says yes. And being recorded, I'm certain that folks like to take advantage of that too. So, no doubt. Awesome, David. Cool. Very good. And Mitchell told me I like to talk, so I'm going to talk less. Promise. I'll be more succinct. Well, iPhone, I don't know what else to call you other than iPhone. You
Oops, I
primarily
got
trade
disconnected.
futures, primarily trade futures between NQ. Freddie, wonderful. Okay, Freddie, cool. NQ, triple Q, and NDX. How would you rank these in terms of importance level? What do you mean by importance of levels? I don't quite understand your question.
Or can you repaste it because I got disconnected, so I can't see anything in chat right now. But everything that you guys typed in chat, has been cleared for me.
Freddie asked, he said, I primarily trade futures between NQ, triple Q, and NDX. How would you rank these in terms of importance of levels? And I was wanting to know what exactly he meant.
Okay, so for that, I can answer that for you. So
Sure.
when it comes to QQQ is your main source of ticker. Like everything's a derivative of QQQ. So NQ, NDX is all based off of QQQ. So if you want like exact levels, I would say focus on your QQQ levels because they will reflect to NQ and also NDX. Because I believe in like the first session, there was a slide where I showed like a list of all the future tickers and how they're equivalent to the like ETF tickers. You can either here, I can either bring it up now, or you can just go back to the first recording and you can see it that way. Let me go ahead and bring it up real quick, since we have time. Okay, let me share this
Excellent
section.
place to enter long right now for both NQ and ES.
All right, can you see my screen? So right here, if you can see my screen,
Yes.
everything in futures is related to some type of ETF ticker, whether it's SPY, DIA, QQQ, IWM, IEI, or GLD, which is gold. So that's why I said like it is important for you to focus on the ETF ticker because they are based off of that ticker in terms of movement. All right, I'm gonna go ahead and stop sharing this screen. Alicia asks, which prop firm do you currently use?
Well, I think we have similar answers, but you use a few additional ones that I haven't used yet. So I use Top Step, Take Profit Trader, and Apex.
We use that, but also ETF and Lunox. But there is another one that's my funded futures. I haven't done that yet, but I am planning on doing that maybe in the near future.
Yeah, and Playboy signals obviously NQ, and he trades my funded futures. So he is familiar with them. Um, I mean, I've heard a lot of these, but experience actually using the platforms, all I can comment on personally, or the three that I have used so far.
Let's see. Sky Darnia says, do you ever add to a winning trade when the original position is going in your favor? Most definitely. So that's one of the things that Apex does have in the rules is that when it comes to DCA, especially on a losing trade, you can only DCA one time, but they will not penalize you if you do add or scale into your winning position. So that is actually the correct way to trade, is because like why the hell would you want to add more and risk more money in a losing trade, because you don't know it's just going to work in your favor. So it's always best to scale in when it's going your way than adding when it's not going your way.
Yeah. Yeah, and somebody today, I'm trying to recall who it was, Go Bucks, I think it was, but somebody asked me what I do for scalping, and I'm not going to say that I do the same thing as others in scalping, but I like to have. I told him, I said, I don't know how Apex treats this for scalping, but I like to utilize a base position, whether it's I was telling him today, if I was trading 6 or 7 MES, I'll have a base position of 3 or 4 MES half that, and then I'll have kind of my flexible part, which I exit on spikes, add on pullbacks. So keeping, like you guys have watched me trade and hold long trades for hours. In order to scalp, I will have some of that position, if I'm focusing on that as my base position overall, and then I will sell part of it at the top and re-enter. So staying in the trade, but that ensures that my drawdown doesn't get hammered by the whole position, if that makes sense, hopefully. But the nice thing is also is I'm exiting on highs, and when if I have a base position that's still in profit, I'm actually, just like you said, you all, I would be averaging up, because if my base is in, I'm not adding to losers. If my base is up, then I'm always averaging up by definition. Does that make sense?
All right, Miguel asks, do you average up on the same account, or do you switch accounts and let the other runner, let the other runner? I guess I'm assuming you meant let the other runner run. Um, for me, I do group trade a lot, so I always average up. Um, but if there is account that I have not traded on, then sometimes I do enter into those accounts, just because I know that my thesis and also the market is going my way.
Got it. Personally, I don't. I just stay in the same account. If I'm trading well in an account, I don't. If today is Thursday and I want to trade my Apex accounts, I just trade my Apex accounts. And I do not use any kind of other accounts. That seems to be an interesting strategy. I just simply have not used that.
All right. O said 10-second in and out, basically ride the candle. So one thing I would say to that is it really depends on the platform that you're using. If you're using cash account, there are no rules, but there are some platforms that do require you for fund accounts that you have to hold a trade for more than 15 seconds. Otherwise, they may penalize you for that. So
Some
just
of
make
them
sure
are
you,
minute as well, you lost. So like if you're counting they give you a number of days, it won't count as a trading day.
yeah. So this is really important that if you are doing platform futures, make sure you read the in and outs of like all the stuff that they will penalize you on in terms of
Mhm.
regulation or in terms of payouts and stuff like that. Because that is really important since you are playing by the rules.
Yeah, because you guys obviously, even if it was a profitable trade, but it was only 10 seconds, that's amazing in cash futures. It doesn't matter. But a prop firm says, what does a trading day count as? A lot of them, it is 1 minute, being in a position 1 minute. And so in doing so, somebody asked that today. I think it was today or yesterday, but asked that today. And I was like, I don't think so. I mean, a 10-second is great that you took a trade that's profitable, but if you have some sort of depends. If you are in an account where you are required to log a certain amount of days, that's going to matter. But like, let's say you're in a take profit trader TPT pro account, shouldn't matter there because you're already 1 day anyway for payout once you get to a pro account. So I don't know that it would necessarily matter that much for TPT, but the others where you got to, log in, 10 days for Apex, absolutely it matters. to make sure that they're logging that official day because it's all done electronically.
All right. So the next question, Jingjing asked, question for evaluation account. Do you recommend starting, or I guess start with MES or NMNQ? Most definitely, always start with micros, especially if you are starting off. It really depends on the size account and also depends on your trading style. So whether if you're more comfortable with micros or minis, that really depends. If you're doing 50K accounts or 100K accounts, I definitely recommend micros 100% because of your drawdown. Um,
Absolutely.
and as
Absolutely.
for MES or MNQ, that really do come down to your trading style, whether you like it fast or you like the slow crawl. So it really does depend on your personality.
Dream zone, yeah. Yeah. You all, we are 1 minute till 9, well, till 6 for you. So I
All right,
guess we'll
yeah,
wait
let's
1 minute and get started.
let's answer these last two questions. So Chaos, what are the rules when you sign up for Apex? So when it comes to Apex, Apex does have a little bit more rules. When it comes to evaluation, evaluations they don't have any rules. Just make sure you don't break the drawdown and hit the profit targets. But once you hit funded, they are a little bit more strict where you can't DCA more than once in a losing trade. Um, Also, you can't do like windfalls, and they do advise against like opening drives or opening market trades. Then also like news trading, like for CPI or FOMC or PPI. Um, so there are a
Non-farm
lot.
payrolls
So
is another one.
yeah, so there are a lot. So you definitely have to read it, or at least go through that video that they offer in the frequently asked questions. Then the last question that we have here before we get started is, I started my account on the 150K account and just took a trade today. How do I start the actual funded? So that really comes down to the evaluation that they have. Whether majority of the evaluations is just hit profit target and don't break the drawdown, but you
Yeah,
do have to
Noe,
kind of read the
Noe,
rules.
what is your prop firm that you have a 150K account? Because pretty much all of them offer that type of account. Well, Tradeovate is a platform, but they're not the prop firm.
Yeah, TraderVate is the like Kevin said, is platform is also an exchange of Apex.
Correct. Okay, so you have an Apex 150 account. Got it. Okay.
Yeah, so I just covered that for Apex. Don't break the drawdown and also hit profit target. That's your evaluation rules. All right, let's get started since it's after 9 o'clock.
Awesome, guys. Well, if you're just logging on, some of you just came on and some of you have been on with us for 15 minutes. Thank you guys so much for tuning in for Rippy Global Futures Training number 3, Risk Management and Psychology with myself and Ulaw. We appreciate you guys um, jumping in kind of headfirst into futures. I know for a lot of you, you were familiar, you'd heard about it, you weren't sure what it was. Some of you guys knew what it was, and you're just finally taking a chance. Some of you guys didn't know about prop firms. Some of you were cash futures trading. So, I'm sure it's a mixture of everybody. But with that being said, we appreciate all of you guys coming on, being willing to learn, being teachable, realizing that, there's things that we all need to work on and maybe learn a few tricks of the trade or some simple, ideas that will help you as an overall trader and a person. So we appreciate you guys tuning in for the third time now. And hopefully this offers you a lot of value. For some of you guys, it will be one of the most important classes because risk management and psychology, you're always going to have your psychology every single day. Doesn't matter if it's a winning or a losing trade, that's always going to be there. So it's going to go with you everywhere you go, your psychology and your headspace, whether it's a shitty day, excuse my French, whether it's a bad day or a good day, winning trade, bad trade, feeling tired, exhausted, etc. So you need to get your emotions under control and your mindset under control if you're going to be a winning trader. That's just a fact. And they've written so many books about it, but we'll cover what is going through our brain here and how we can help you. So go ahead, you all.
That's right. That's right. So in this session for today, if you don't take anything or even process anything that we're saying, there is one thing that I want to you to remember is this next page. Trading is gambling without risk management. This is really important. So a lot of people don't realize that trading it is gambling because they think, hey, trading is gonna be like a lot less risky, but that's not really the case. In my opinion, when it comes to trading, I think trading is actually more risky than gambling because if you go to a casino, you're usually almost right 50% of the time, depending on what you play. Let's say, for instance, if you play like roulette, even though roulette is, or maybe baccarat, initially is like close to 50%, but the house does have that edge where they try to give themselves that edge of like 3 to 4% in order for them to win and make that money. But when it comes to trading, trading without risk management is either is it's hard because it's not exactly all or nothing. Maybe sometimes for winning trades you'll have like 20%, 30%, 50%, and sometimes when you lose all of it. So it's not like a 1 to 1 ratio. Whereas like gambling, typically it's almost 1 to 1. If you win, you'll get like the same amount of return back. So just remember this: trading is gambling without risk management. All right, is there anything you want to add, Kevin, before we move on to the next
Well
page?
said, buddy. I have nothing to add to that.
Okay. Do you want to go ahead and take care of the risk management part?
Well, this risk management is going to be different for everybody, and it's going to be different based on your account size, especially if you're prop trading. So many folks have started the prop trading journey, and that's fantastic. And so you have to have a trading plan for that. And what does that look like? I will tell you for a fact, as a basic foundation for most trading in general in futures, having a trading plan that includes a higher profit target than a stop loss will typically be your like 101 basic trading that's going to help you. Now, that being said, everybody's trading plan is different. My trading plan, for example, includes things like buying the 50K accounts and running those to funded and payouts and trading a certain position size. Okay. For example, on a consolidating narrow trading market on a 50K account, I'll trade 2 ES. Okay. That's the type of day where you have a 30 or 40 point range and it's not, super volatile. But part of my trading plan is that when we see increased volatility, my trading size goes down, for example, half, and my stop losses are doubled. Okay. But what my trading plan reflects with just about every trade is that I'm either going to have something like a $500 or a $1,000 stop loss versus just a risk reward trade. And so my entries reflect the fact that I have an a stop loss targeted on the chart, and my risk that I want per trade is factored into it, so I don't get into a bad setup um, and get my butt kicked. Okay, so trading plan can be different for everybody. You guys are going to craft your own. If you have certain traders that you respect that are successful, you can ask them about their trading plan. Some have written it down, some don't. That's their own prerogative. But risk tolerance rule, if you want to speak to something specifically, law in the 1 to 5% rule, by all means, go ahead on that.
Yeah, sure. So when it comes to risk tolerance, everyone is different, right? Some people are more risk averse, and some people are more risk taker. Like for me, I'm more a risk taker than risk averse. So the 1 to 5% rule does not apply to me. I tend to do like 10 to 20%, depending on the market conditions. So I'm a little bit more riskier, but ideally, you do want to kind of plan out exactly how much risk are you willing to take. Because once you plan out on the risk, that's the amount of risk that you are accepting that you're willing to take. So let's say, for instance, if I'm doing 10 to 20% and my drawdown is going to be like, let's say, $5,000. So maybe I'm going to risk like either $500 or 1,000, and that's going to be equivalent to either 10% or 20% of the $5,000 dollar drawdown. Mhm. So in that case, if I decided that I'm going to either lose 500 or take 500 or risk 500 or risk 1,000, I'm willing to lose that no matter what. But once I hit to that mark, then I'm going to flatten no matter what. So this is something that you really do have to kind of work and tweak a little bit. Whether if you have to journal every single day or maybe just have to play around and see what your emotions are, because the more you do put in a trade, that is something that you'll find yourself uh, realizing like, hey, if I'm like sizing in too much, I'm going to be quick to either like cut my losses or I'm not going to hold as long as I should have because I'm more anxious because of my risks that I invested in that position or in that trade. So that is something that I definitely do encourage and also do recommend that during the market, take a few of your trades, make your own trading plan, and just trial and error, right? Maybe start off with a few micros and see how you do. Just make sure you write down your emotions, write down how you're feeling, and if it's going against your trade, write down exactly of what you're doing at the time. Are you like nervous? Are you anxious? Are you like freaking out? Those are really critical because at the end of the day, you do want to self-evaluate how you're doing when it comes to trading.
Yeah, and one thing I want to add to that, law, is something that I've talked about. I haven't talked about this in like 3 or 4 months. And I wrote posts about it, and I don't know how many people read it or didn't read it, but it's something I learned from my previous mentor. Is something called a burn rate. Are you guys in the chat? Please let me know if you guys are familiar whatsoever with something called a burn rate. No, no. Okay. So what a burn rate is, let's talk about the context of options because that's going to be easier for you. Okay. So most people haven't heard about a burn rate. All right. So here's a burn rate. So let's say I'm trading options. Okay. And I have, it doesn't matter if $5,000, $10,000 account. That doesn't matter. But what matters is I have a personal emotional threshold called a burn rate. And what that is how much I'm willing to risk and let that trade go to zero. So, for example, let's say I have an SPX options position, okay? And I say, okay, I'm taking $1,000 position, okay? Now, if the thought of losing that $1,000 is kind of, you know, twisting my gut and a problem, and it makes me really anxious, meaning, that trade goes to zero. Okay. If that's the case, my burn rate's less than 1,000. Okay. So what you do with a burn rate is you back it off until you get to a comfort level. Is 800 giving you that same feeling? Is 700? Is 600? Is 500? Work your way down and say, 500 is kind of becoming the threshold, or it's close, you know, if you need to back it down again, so for example, in options, maybe your burn level would be like what you're comfortable losing on this specific trade going to zero. Okay. Is it $300? Okay. If you're like, okay, that's cool, $300, I won't miss it. I'm totally comfortable. I can stay in the position and not, cry or get anxious or whatever. Okay. That's where you start to develop your burn level. That's your position size, or that is your risk amount for a trade. So you can take this and apply this to futures trading. When you say, oh, I've got a 50,000 treat, if you have a 50K account, please treat it like you have $50,000, okay, in real money. And they want to see a $3,000 profit of real money. Now, for you, is your burn level $400 on that trade? Is it 500? Is it 1,000? I don't know. I can't answer that for you. That's your emotional thing that you need to do. But that is something you guys can try to see because it's definitely applicable when you talk about cash futures. It's definitely applicable when you talk about options because you're talking about your hard-earned capital, right? And so you need to consider that also in a prop firm if you were to look at this like it was a cash account, okay? Now you could risk, let's say, my burn rate was $500. That doesn't mean my position size has to be $500. My position for an options, this is purely an example because you guys are familiar. I could have a position size that's $2,000, okay? but my burn rate was 500, which would be a 25% loss in that case. So if you have your burn rate reflected in your risk management, you're going to stop being anxious. I can't answer for you what your burn rate is. I can't answer for you if it's, 1,000 or 500, because everybody has different size accounts here and everybody has a different emotional state and a different mindset. I can't do that for you. But that is a exercise that you should be doing in saying, what is my risk tolerance for this specific trade, or trades in general, I should say. If it went to zero, what would I be comfortable with theoretically? And that's how you're going to have start controlling your risk management more, rather than seeing like these posts like, man, I went full port and lost 7 G's. I'm like, yeah, it makes me sick when I hear that, because there's absolutely no risk management at all. But if somebody asks you point blank, if you lost $1,000 right now, how would that make you feel in your stomach? You're like, you know, that's a little rough. Okay, well, if they ask you point blank, would 500 be a problem? You'd be like, you know what, that's okay. Well, now you're starting to hone in on what your burn rate is, and that is an absolutely critical number that you need to figure out. And as you become more successful and make more money, let's say down the line, then that burn rate can change. It doesn't have to stick at that moment. You know what your life is like. You know that you've got incomes and businesses and other things in your life supporting yourself. So that burn rate's going to be different for every single person here. You've got to figure what that is.
Yeah, that's right. So if you want to think about burn rate, like I said in the original slide, trading is gambling, and that is 100% correct. So if you're going to casino or you're gambling, you already automatically know that whatever you're putting in, you're going to either lose it or you're going to gain something. So that's exactly how you should be treating trading is whatever you're putting in, make sure you are prepared to risk it all and make sure you go to zero. So like Kevin said, like some people they have self-control. They're willing to risk $1,000, but to enter into that position, it's going to be like 20% of their trade. So they're willing to go ahead and drop 5 Gs, and if they lose 20%, it's $1,000. But if you don't have self-control, then the best way to do it is just put in 1,000, and if you lose it, that's fine because that's the same amount of risk.
Goes to
And that's
zero, right?
something, and that's just something that you have to figure out yourself because everyone's different. For me, starting off, I didn't have self-control, so I needed to go in each trade with the mindset of I'm going to lose everything. So that is something that you will have to eventually find out over time, whether if you do it, find out maybe the next day or maybe like in a few months or even years. It Everyone's journey is different. So that is something that you definitely have to work on.
Well said.
Right. This is something that I do want to stress and cover, position sizing. Most people don't realize how important position sizing is, especially when it comes to prop firms. So whether if you have a 50K account, 100K account, 300K account, don't see it as the account size. What you want to see is the drawdown. So if I have a drawdown of $3,000, that is my account size. I do not want to. So I'm basically playing with a $3,000 account. Or if I have a $300,000 platform account, I know my drawdown is going to be 7,500. So I need to have the mindset of having, hey, my account is 7,500. How am I going to manage that risk? So that's where it's going to dictate your position sizing. So my recommendation is if you have a 50K account or 100K account, don't go more than 1 mini. So definitely switch to micros. And if you switch to 10 micros, you'll be able to trim more and you also hold longer at the same amount of 1 mini.
That's right. Using 10 micros versus one full mini. That's right.
But that's also comes down to a lot of prop firms do have that conversion rate of 10 micros to 1 mini. But if you were to do Top Step, not Top Step X, but Top Step like Trade Away and Top Step Rhythmic, they do not have that conversion rate. So just make sure that you keep that in mind. And you do have to play with minis no matter what. All right. The next part is prop firm rules. I did cover that earlier. When it comes to prop firm rules, you do have to read the in and outs. And a lot of the rules, I know most people do hate the prop firm rules because it feels like restrictions, but it does really help you become a better trader. So whether if it's
Yes.
like Apex, they have that only one time DC rule in a losing trade. That is definitely the right way to trade, and you can always scale in a winning trade.
In your opinion, Eula, do you find Apex to be the most challenging prop firm overall, as far as, yeah, just simply the restrictions and rules that they make? Do you find that to be the case?
Originally, I did, but now Elite Trader Funding (ETF) is actually more strict than Apex because they implemented the 20% trading rule. So for them, if you do ETF, it's basically they have this thing where it's similar to consistency rule, where whatever your highest P&L in a trading day. Let's say, for instance, my highest P&L is $2,000 in a day. They're saying that for the future trading days, in order for them to count, you have to have at least a minimum of 23% of $2,000 in order for it to count as a trading day. And I think that's a little bit absurd. And they're penalizing you for having big wins and really good trading days. So right now, I would say ETF is probably the worst of them all.
Yeah, that's exactly right. And so, um, I haven't traded with ETF, but I know that if you just like Miguel said, if you can trade with Apex, you can trade with anything. And the reason is because the constant trailing drawdown. Now, when you have a funded account, that trailing drawdown kind of stops. It stops at your drawdown amount plus your initial money. And so, if you have a $250,000 account, it'll stop at 256,500 roughly. It's like 256,600, but they're the toughest. And so, like Miguel said there in the comments, if you can trade Apex, you can trade any of the others. Okay. That's just simply a fact. Cut your teeth in the place that A is pretty cheap overall, for starting an account. Sometimes it's really cheap, but right now it's pretty cheap. And B is you're going to be in the toughest environment. And so when you go to easier environments, you'll be like, wow, this is easier, right? Because you got used to the hardest atmosphere in trading, which is Apex. It may be the cheapest to get started, but it's also the hardest to do. And so, which is a great trade, which is a great challenge. And so I know a lot of folks out there like challenges. It absolutely is a challenge to trade Apex, no doubt. Because you go and size into some trades on one day, you may blow the account. It's just an exercise in self-control and being in a marathon versus the sprint. People get lured into the 1 day evals on Apex, when you can go to funded and then they blow their funded like hot and fast. Um, but if you treat it, like a marathon, it's not a sprint, then you'll become an absolutely much better trader with Apex.
So O in chat says, why did they give you 1 day to pass? So for that one, it's more of a money making scheme. So this is one of the main reasons why I hate the 50K accounts because I can pass 50K accounts so easily, and to sustain the funded account, not so much. It's because when it comes to 1 day pass, if you have they actually play on like human emotions. So you basically feel like, oh, hey, I can pass in 1 day, so that way I can get funded the next day, and that's the way most people build their account. And when it comes to, I guess, prop firm rules, the one thing I do recommend is if you're gonna stick with 50K account, if you're gonna go 50K account, make sure you stick with 50K account. Don't keep on switching like 50K account here, then you blow it, then you switch to like 100K account. Then after you blow that one, you go to 300K account. Uh, it does kind of mess up your trading plan and also your trading style, especially when you switch to different account sizes. If you do go, if you do like start off with 50K account and you somehow switch to 300K account, my best, uh, I guess, advice is treat the 300K account like a 50K account, then you'll never blow up. And
Yeah.
when it comes to prop firm rules, I can't stress enough about the prop firm rules. I think the other week, I actually made a mistake with take profit. So with take profit, where for evaluations, they have a different type of rule set. like for evaluation is end of day, but once you
Yes.
switch to funded, it's not only it's a daily drawdown until you hit the max drawdown. And I totally forgot about that because I was stuck on the funded for a long time. And once I got got the new, I guess, funded account, it completely went over my head. And I was up like $1,000. Then I decided to go in a little bit more and overtrade. Then I lost, ended up losing like 3,000. Then the next following day, I was thinking, oh, I still have, like a extra 2,000, 3,000 drawdown. But then I looked at my drawdown, like, what the hell? Why do I have like only like 500 to 1,000 drawdown left? And that really screwed me up. So just make sure you are consistent and treat the evaluations like a fund account.
Yeah. Yeah, Ruben. Ruben just asked, I have three 50K Apex, but haven't done any trading, still needing to get the hang of it. So just get started, man. You have three. You don't have to trade all three. People here will copy trade or trade all three. Some have up to 20 accounts. But you're getting started. Trade one at a time. Okay. Trade that one at a time. You need to get the hang of it. You need to see and feel how price flows. Okay. How it moves, position size. I told when prop firm trading, as far as this Discord is not that old. It's only about 2 months old because so much was heavily weighed on SPX and everything Hassan was doing. When I came and started signaling futures in May, that was after doing options for like 3 or 4 months before that, and so I switched to futures. But then we moved to prop firm. I had to get the hang of things. Okay, Ruben, I wanted to test these accounts and see how price movement moved, and so I would size, what I thought was probably too big, and then size down and then size down, and it would blow it in count. And I'd be like, okay, size down, size down. And so that's how I kind of developed my trading plan, which is still ongoing, and can always be improved. But that's how I decided on my current position sizing and stuff like that. So you're going to make mistakes. It's okay, Ruben. Please understand this. You are starting out as a prop firm trader. You're going to blow accounts. It will happen. If you don't, I want to shake your hand, because if you're able to now you're probably a professional futures trader if you don't blow any of these accounts ever. But let me spoil it for you. You're going to blow accounts, and it's okay. You didn't lose 500 or $1,000 on that trade. You lost the value of the account, which sometimes, if Apex is doing its thing with a promo, maybe $17. All right, when they do their 90% promos. So it's okay. So I don't want you guys to get caught up in being perfect, having perfect execution, because some of you are going to have fat fingers, and I get fat fingers every once in a while, like entering, exiting, and like, oh crap. So it's okay. You're going to make mistakes along the way. Don't worry about it. Just get in the game. Okay. Jingling has a question for 50K Apex account. I want to start with MESMNQ for recommendations. How many should I buy for each time? Okay. This, in my personal opinion, depends specifically on the volatility of the market. And so I can't give you an answer on a consolidating narrow range day that matches an answer where we traded 200 points of volatility like we did last week, right? Because moves are massive and so quick, I can't answer that. But I will tell you this. I will tell you I typically trade about 2 ES on a consolidating narrow range type day. Okay. On a increased volatility day, I'll trade half or a third of that. And then when things are just completely bonkers like they were last week on a $200 day, I was literally trading 1/4 of my normal size, which was 5 MES. Now, the question about ES and NQ came up today too. Guys, the movement of 1 ES is not the same as a movement for NQ. Please understand this, is that NQ on average on a daily basis will move 4 to 5 times the number of points. Okay. And so if you took one ES to one NQ, one contract, one lot, let's say beginning to end of the day, what's going to end up happening is NQ profit. Let's just say it was up 50 points for ES and 250 for NQ. NQ is going to be about a 2x overall profit. Okay. So if you're trading, used to trading one ES, you need to work on 5 MNQ. Okay. It's about half. So keep that in mind. Put that in the back of your head that NQ moves 4 to 5x. And so, but the ES movement's only 2.5. It's $50 to 20. So it's only 2.5 times. It's not 5 times the movement. So NQ position sizes need to be smaller than ES by about a half to be an equivalent move overall in the general market.
And also, Jing, when it comes to that, so my trading style is different from Kevin. So I do like to scale in. So like what you mentioned on a normal ranging day, if 50K counts, I recommend no more than like 10 MNQs or 10 M MES. So if knowing that, what I'll do is I'll take half of it. So maybe like starting position, I'll go either uh two or maybe five MNQs or MES. Then if I feel like get average down one more, then I can go ahead and enter the same amount of position. So that way I can have the equivalent of 10 MNQs or 10 MES. Um, but like Kevin also said, on volatile days, I do go either one fourth or one third of my original position sizing. So I'll go either two MNQs or three MNQs. So this really varies on the market conditions.
Yeah, great
Um,
example the other day, Law is last week I had an ES trade that went for 110 points. Okay. Well, first of all, we don't even usually have a 110 point range on ES. Okay. So it's only possible in markets that are super volatile. But that specific trade, Jingling, I was 1/4 of my normal position size. My normal position size is typically 2 ES with a 10-point stop loss on a narrow trading market. Okay. That day, I simply sized 1/4, so 1/4, and I multiplied my stop loss by 4. So I actually had a 40-point stop loss. And some people are like, oh my gosh, I can't handle that stop loss, which is funny. I'm like, dude, I'm 1/4 position. I am still the same amount of risk. For me, that was still a $1,000 grand total risk in that trade, even with a 40-point um, stop loss. And good thing I did, because in the middle of that entire trade was a 30-point pullback. And I was able to hold through that because I had fair value gaps in liquidity levels and in swing highs and swing lows. So I go into a day knowing that this is, CPI or PPI, was reasonably volatile, or non-farm payrolls, or Fed minute, Fed, like Powell talking or whatever it may be. I know that day is going to be more volatile than normal. And so I will size half or even a third on those days. So just know what you're getting into that day. Is today a day with absolutely no news, a day that's high, positive gamma, that's trader link. And if you're in a day that looks like it's going to be pretty tight trading, size up. It's okay.
all right, Joel, don't worry, I got you. I know you posted your question before, Jing, so I know you posted again just in case we missed it. So you asked, I just passed my 50K account. How much do I need to make to sustain the account before I pay out? So honestly, for this one, this does vary from person to person. I know when it comes to Apex, they do require 10 trading days, but don't think about trying to achieve the payout within 10 trading days, because not only is it going to add more additional stress and also change your mindset, but you're going to be like forcing plays. Then also you're going to be hitting a certain P&L every single day to get that payout within 10 days. So what I would recommend doing is, if you have a 50K account, aim for like 200 200 profit every single day. If you can get 500 profit every single day, that's great. But if you can do a minimum of 200, even 100, 100 to 200 a day, then I think that should be good. And you just call it a day and take a break and enjoy the rest of your day. But it does based off of everyone's personality because at the end of the day, you do have to kind of control how much you trade because futures, it is you can trade, you can go in and out and you can do unlimited trading. So without that restraint, then you will tend to overtrade.
Yeah, absolutely. Okay.
I know there's one person that mentioned I don't know how you say the name. It's like GL Lu. I started my first funded and blew in 2 days. So this is why I mentioned earlier. It is really important that you treat every evaluation like a funded account because even though you can pass evaluation so easily, but if you were to apply that same trading style to funded, you will blow your account very, very fast.
All said.
Let me see what else. iPhone said MNQ seems to have small variance over NQ. Also, the time and sales on MNQ is hard to follow. Would you recommend just watching MQ while executing MNQ? So for me, I actually, funny story is I actually look at time and sales for QQQ, for NQ. And that's how I base a lot of my time and sales reading is off of QQQ. Um, but there are some slight variance because of volume or because of demand, but it's not that much. So if I had to recommend or give you the advice on time to sales, read the QQQ over NQ. But if you want to read NQ, and by all means, you can definitely do it.
Okay. Joel, did you get you said, guys, I missed my question. Joel, did you get that answered? Based on when you type here, I wasn't sure if you got that answered. Okay. Can you please restate your question? Because I did see a question by you that said I just passed my 50K account. How much should I make to sustain the account before payout? Is that your question? Okay, cool. Um, let's
And
see
Joel, I think
here.
I answered that earlier, but
I thought you did because you were talking about a couple hundred a day.
yeah.
Now, Joel, what type of account do you have as well? What's your prop firm? Apex, okay. Well, just know this is that Apex, when you go to the funded stage, they require 10 days. They talked about doing 7, just so you know. We'll see if that comes into effect, but they talked about 7. Um, but 10 days in doing so, know that you're obviously going to be in the midst of winning and losing days. So just make sure that your thresholds, of course, for your profits are greater than your thresholds for your losses. That's one tip. You know, if you only want to risk 200 a day, make sure that your profit targets are $300 or $400 a day. Okay, so that your winning days will outweigh those. But that 50K account, everybody's different. Again, I can't answer that for you, bro, because I'm the type of guy that if my risk tolerance for one trade is 1,000, then I want to see 1,500 or 2,000 for that trade. Okay, so obviously that moves a little quicker than some people are comfortable with. This is not a comparison. Okay, this is risk tolerance. This is experience. This is knowing about price action, all these things. Okay, so 500 would be also a decent target. Okay, but we can't answer that for you. Just know that you don't have to shoot the moon, and go $3,000 or $4,000 in a day. If you watch Playboy actually trades 20 accounts. And typically, if I'm not mistaken, Playboy, if you're on here, a lot of times your profit in those accounts will be somewhere in the neighborhood of kind of 1,000, 1,500 per day. And then you kind of hang it up. But everybody's preference is different. And so 1,000 to 1,500 with one NQ, that's not like a ton of points, right? That's only 50 points, but that's okay. You don't need to catch the whole move. And it just, like I said, it just depends on your risk profile. If you want to have more accounts, great. Then target lower days because let's say Playboy right here, who trades 20. Well, if his is $1,000 a day, that's actually $20,000 overall, isn't it, guys? And so you can trade more than one account. If you trade 10 accounts and it's $200 a day times 10, guess what? That's a $2,000 day. So just keep that in mind. If you're trading multiple accounts, you are trading, that's a multiplier for you. And that's a way that a lot of successful people in prop firms will do it, is they will increase the number of accounts, but decrease necessarily their profit targets, which helps them manage and mitigate risk. You understand?
And since we're on the topic of Joel, you mentioned that you average 1K a day from scalping. I honestly think that's a lot. You're probably over trading and you're also having unrealistic goals, especially on a 50K account. Uh, Back when I was trading on a 50K account and getting payouts, my goal was actually 200 to $500 a day. Yeah, I call it a day.
And
Uh,
how many accounts were you trading, Law, when you did that?
I was trading a lot. I was trading like over 20, sometimes even 50. I think the most I ever had is 50K, 50 accounts at a time with different platforms. But if you do have that buffer where you hit max drawdown and let's say maybe for a 50K account you have like 6K or 10K buffer, okay, sure, maybe you could risk 1K from scalping every single day. But if you're not hitting max drawdown and you're hitting 1K a day, that's very, very risky.
Make sure
All
your
right.
profit targets are more than your drawdowns or more than your loss limits on the account. Please do that, guys. It should not be a 1-to-1 this is my personal opinion. It should not be a 1-to-1. It should be a 1.5-to-1 or 2-to-1 for your profit versus losses. That's my personal opinion.
Right.
Because if you're a
Next.
50-50 trader, right, meaning you win and lose 50% of the accounts, if you have your profit targets further, but this also has to do with liquidity levels and things like and stop losses at the appropriate places. And so that factors into it. But I know for a fact there is no way that I walk into a trade 1-to-1. Almost never. Very, very rarely do I ever walk into a trade 1-to-1. I'm typically on average, I posted my stats from Top Step because I thought you guys might have been curious. And I don't trade risk reward, meaning I don't trade, looking for a ratio myself. I trade my stop losses and fixed risk, but it's interesting that it worked out to about 2-to-1. And it was also a 75% winning percentage. So you combine those two things, guys, you're going to get ridiculous payouts and you're going to get them fast.
Okay, going to some previous questions that we may have missed. Ruben said, I noticed that today's NQ on time and sales was about 10 minutes behind. So if you're getting 10 minutes behind delay, that means you're not probably subscribing to
It's
real time data. So that's definitely that you need to check out. And G says, what do you use to watch time and sales? For me, I use Thinkorswim because it's free, and they are pretty good with time sales. So if you don't have Thinkorswim, I definitely recommend opening an account and just use their Thinkorswim application where for that real time time and sales. If you're
OT
paying for
asked, how do we use Trading View? Was that the next question? Trading View to trade Apex minis. I have not tried that yet, but I would almost guarantee that it would have to be choosing the Trade of Eight versions of the Apex accounts. I have not personally tried doing the Apex with Trading View. Has anybody in here tried to do that and successfully set that up? I don't want to speak about something that I'm ignorant about.
I haven't done it, but I do know of it. So you can do it. But what it is you do have to have TradingView, and you can only use one account at a time. So if you do plan on group trading, you cannot group trade in TradingView.
Okay, that's good, guys. So group trading, if you're not familiar what group trading is having 10 accounts at once and trading all 10 accounts on the same order entries and exits. So if you guys don't know what that is, but that's what it is.
Another
Uh,
question is OT asked, what is time and sales? It's not in, but and. Um, you want to cover this, Kevin?
yeah, time and sales is just a reflection of what the market does. on specific orders for buying any asset, whether it's a triple Q option, whether it's an Apple stock, etc. That shows the literally the timestamp and the purchases of every single um, asset in almost in real time.
Yeah, I mean, it is a zero sum game, so it's like you said. Every ticker has a. I want to say, okay, let's rephrase that. So whenever you want to buy something, someone has to sell it. If you want to sell something, someone has to buy it. So it's just basically that zero sum game, and that's what time and sales is. It tells you exactly how many orders are for this given price that are available, and people are asking for it, and how many orders are filled,
Yep,
and that's how you get the candles too, in the charts.
absolutely. Uh, J. Lou says, "What's my TP and SL? Would you recommend for 50K count?" Um, I want you to give your answer, Yula, please, and then I'll give mine after the fact because I have a feeling you do yours differently than me.
Okay, so for me, I can answer on NQ. So when it comes to NQ for 50K accounts, I tend to, it really depends on how I'm trading. If I'm scalping, I'm going to scalp about uh 5, 10 points, 15 points, 20 points. I'm going to go ahead and take those quick profits because I don't like to hold, and NQ moves really fast. But if I am going to hold, then it really comes down to my trading plan. Like let's say for instance, I'm trying to catch a bounce at either a psychological level or maybe like a uh, tested support level. Then maybe my sizing is going to be a little bit bigger, and my profit target is going to be based on the next level or where I'm going to exit, or maybe I'm going to trim on the way up. Um, so that is it really varies. For me, I don't use ticks. I use levels or points. So so it can be like from 5 points, 10 points, 20 points, 30 points. And typically the higher points I go, I I I trim on the way up. So by the time I hit like 30 points, it's going to be runners, or I'm going to like at least exit most of my positions.
For take profit and stop loss for me, it is based on liquidity levels, fair value gaps, etc. I've gone over this in pretty good detail overall. I talked about it a lot, but to make a long story short, my take profit levels will be typically, on average, will be 15-minute swing highs in the market. Okay. So, for example, you guys are all looking. I want to share my screen right now. I'll just share my screen and make it simple. Okay. Um, okay. Can you guys see my screen? Please let me know. Okay. Perfect. Okay. My screen. All right. Okay. Look at my screen. I'm actually in a trade right now, just so you know, guys know. I entered a trade 2 hours ago. But long story short, I'm looking for is this a bullish market, bearish market, etc.? And where do I want my profit targets to be? Where do I want my entries to be? I take entries, for long going on pullbacks. It is an absolute requirement. That's like trading 101 to do that. Don't chase. But I'm looking for 15-minute swing highs. And for us, it's a little tougher. We have to go way, way, way left. Um, Way left because of the huge market tank that we experience, right? And so swing highs and lows are going to be your 15-minute swing highs. So we already blew through these levels right here, but like that's going to be my take profit, okay? If you can see my screen here, these are previous take profits, okay? Like these 15-minute swing highs, okay? And the reason being, and I'll say this again, why this is and why they're important, these levels are. When you go to deal with liquidity, you're talking about market makers and um, you're talking about market makers, dealers, people with multiple billions of dollars on the line every single day at risk that has to be managed, and it's managed primarily with algos and stuff like that. So they will typically go to these swing highs and swing lows before they reverse. So if I'm going up, to a swing high, for example, my take profit today, the price is at 55.74 for ES. My take profit is all the way over here at the nearest swing high, which is 5,600, basically 5,601. Okay. There's not a whole lot closer that I expect in this trade. The next level, if you go even further back, is 5,630. Those are simply 15-minute swing highs, or sometimes even hour swing highs, depending on how far I have to go back. So that's how I find my take profit. Now, my stop loss, I've already considered my stop loss. I should have when I entered the trade. Okay. If my stop loss, I entered the trade, for example, 55.67 earlier. So this is so far a winning trade. My stop loss is like at this swing low, 55.57. I have a 10-point risk. Okay. I'm bare minimum going to want 10 points above, but I'm looking at the swing highs. So for me, it's a liquidity play, just like it always is. Almost every single minute of the day is all about liquidity in the markets, especially for futures. So I'm not looking for a 2-to-1 ratio, risk to ratio. I don't care about that. I just know I want more than 1-to-1 always. That's one thing I will tell you for a fact is I want more than 1-to-1 always. And so if this trade works out and just so happens to work out, it'll be a 4-to-1 or 3-to-1, excuse me. So I'm always looking for liquidity levels when I have my profit targets. And I'm always considering my stop losses because it's fixed to a set dollar amount for me. Does that make sense? No, J. Lou, I am long right now. I'm long in my trade. So I don't want to get too, I don't want to make this, about signaling right now. I'm just saying right now, just so you guys can see my screen, those dashed lines that above there, that's my profit target. If I don't establish something, let's say, like just a fixed 20-point profit target or something like that, that's going to be one of my profit targets. So I look for liquidity levels. I look for them to typically be 10, 15 points apart. Sometimes they're like crazy far apart on a, like we have been recently, they'll be 20 or 30 points apart for different liquidity levels. So I'll utilize those. But yeah, that's what I look for and take profit. And my stop loss is my fixed dollar amount. So if I've established that this is a market that is probably going to move reasonably slow, I size up and then I look for my stop loss to cooperate as long as it's cooperating on my chart with an important level. It may be a swing low, 55.66, for example, maybe this swing low, 55.57. It doesn't, it matters in the moment when I'm going into the trade because I have to know where my risk tolerance is. But that's already established once I figure out, what are my swing lows that I don't want violated. And then I'll start crafting my take profit thereafter. Make sense? Okay, cool. Let me stop sharing.
All right. So David asks, for group trading, I know that you mentioned Point Tower is a great platform. I have a static account. Will work with any future accounts of different tiers. So when it comes to Point Tower, just keep in mind it only works with rhythmic accounts. So as long your platform count is rhythmic, it will work. As for static accounts, it really doesn't matter whether it's a static account or 250K account or rolling drawdown. If it's within the same platform, it will be able to connect and you'll be able to trade copy whatever rhythmic account you have for that platform. But if you have multiple platforms, let's say I have Apex, Upstep, ETF, and they're all rhythmic accounts. If I want to group trade all three of those platforms together, I do need to pay a monthly subscription of, I believe, $70 that allows multiple connections in Quink Tower. Um, what's the difference between Top Step and Apex? Top Step is end of day, and Apex is trailing drawdown. And Apex do offer bigger size accounts where Top Step is 150K account for max size, where Apex offers up to 300K accounts.
Yep.
Let me go ahead and screen share again. Back to my
Top step in
slide.
the day measurement, like you all said, apex is the trailing drawdown that's constantly working, dragging behind you.
Perfect. All right, let's go to our next slide. Psychology. So psychology, there is this, I guess, I made into, I guess, an anagram of calm. C for control your over emotions, avoid FOMO, limiting over trading, and also managing revenge trading and loss aversion.
Yes.
So this is a huge topic because at the end of the day, psychology is more important. It's, it's not, I guess, risk management and psychology is important. It goes hand in hand, but psychology plays a huge factor in terms of trading because even if you have really good risk management, but if you can't control your emotions or psychology, then there's really no point.
Yeah. Yeah, I mean, honestly, this is probably the most important slide, even though it's short and sweet. It's the most important slide in the entire 3 days of classes, is because FOMO and over trading and revenge trading it's the type of stuff that blows your accounts, right? You know,
100% correct.
it's not like, you don't have the knowledge to have a winning trade, but like I said, going hand in hand with risk management. But this is huge, and what it looks like a lot for retail. We're retail, just so you know, unless we have any hedge fund operators in here, or if BlackRock is in here. I don't think they are in this futures class. So one of the retail um, problems with FOMO is the thing that market makers prey on. Okay, is FOMO, and it's buying the breakouts, selling the breakdowns, thinking that it's going to just continue down. The breakout's going to go up, 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 up. Okay, as though the market was a penny stock going 10x in a day. Okay, market makers who have billions of dollars study the psychology of people, and they study what retail does. Okay. And retail, they chase, today, for example, I took one trade towards the end of the day and it was break even. It was such a crap market for me today because I was waiting patiently looking for a pullback all day long. Never really got much of it, but we got to a level where Gamma was going to offer us support. And so I took a trade on it. But retail is impatient. Retail can't wait for the pullback. A nice thing that I like to use is fair value gaps. That kind of helps frame where they could potentially pull back to. So that's a great tool that will help you guys actually visualize pullbacks and when they come. But please do not enter trades as the stock is soaring and printing a massive green candle, and go buy the end of that candle. That's literally the worst place to buy anything ever because those candles always retread, and that's FOMO. So it's okay sometimes, guys. It's okay not to trade that day. It's okay to be patient and let a market move happen. Today was a great example. I literally, because of prop firm trading rules, I wasn't going to be in the news, right? When it dropped, the stock, or excuse me, the market soared for ES 30 to 40 points within 10 minutes. I was hoping for a pullback of some size, never got it. And then the thing just treaded up all day long without any real pullbacks. I think the biggest one was like 10 points, not offering any kind of area where I wanted to enter. That move made the entire move without me. That's okay. Sometimes we have days like that, and then there's other days where there'll be precision sniper like entry and catch massive moves. It's just every day's different, and one of those days happens. And so I didn't get FOMO and just say, "Oh, I got to be in this, man. I just watched this thing grind up. I got to be in this." It's okay to not trade.
And we're all human. Like without emotions, no, I mean, emotions basically makes us human, right? Because otherwise you'll just be a robot. And that's why it's really critical for you to control your emotions. I mean, we all been there. If you're in a really good trade and you're seeing all this like big P&L, you're like, oh, I'm gonna wait until it hits the next level where I'm gonna make sure it's gonna hit like $10,000 before I take profit or trim. Then
Mm,
before you know it, then it goes against your way, then it drops to like maybe 2,000. Then you're like holding, then you're like, wishing it's going to go back to 10,000 or go back to the original balance that you had.
mm.
And and this is something that makes trading so hard is because your emotions. I mean, you probably hear this all the time. Trading is one of the hardest professions in the world. It's true. If someone's telling you trading is easy, then they're either a sociopath, or they have something wrong with their, I guess, personality, or they're a robot. Um, so this is something that everyone's different. You have to figure out a way for you to control your emotions, whether it is maybe taking a step back, like if you're in a bad trade, take a 5 minute, 10 minute break. Some people do um, the technique where you basically trade for 20 minutes. Then after 20 minutes is up and you have it on a timer, then you take a 10-minute break. Then you rinse and repeat. Some people go for a walk and just like, or go exercise for 30 minutes, then go back into trading. Or if you're really having a bad day after a few losses, then call it a day. So that way you won't revenge trade. But you need to figure out exactly what works best for you. Because like I mentioned earlier, if you don't have control of your emotions, then no matter how good your risk management is, there's really no point because I could put in a mental stop or maybe like set a events trade management ATM of like 20 points. But if I keep on moving that stop loss to uh, either lower or higher and trying to widen that gap, then that I'm throwing risk management out the window, and that's where my emotions come to play because I'm hoping that it's gonna go my way, or I'm thinking, oh, hey, let me go ahead and risk a little bit more um, because I'm afraid to take the loss. Let's see. Limiting over trading. So limiting over trading, that is something that everyone needs to figure out exactly what will stop them from trading or calling day. Because like I mentioned in futures is 23/7 or 23/5, sorry. And you can go in and out as many times as you want, however you want, because it's a limited buying power. So to prevent that from doing from having a negative impact on your P&L, you need to either set some type of rule on yourself or hit some type of profit target. Profit target
Yes. Yes.
may work for some people and may actually go against them because like for some people, maybe they set a profit target of like $500. Like, well, I made 300 so far, but I'm kind of $200 shy of my profit target. So they're forcing trades. So they eventually go into red. But some people like the profit target where it's maybe it's more achievable and it's easier for them to call a day. So it really depends on your personality. Um, it's kind of like gambling. If you go to a casino, um, you want up $100 and you keep on somehow winning and you turn that $100 to $200 and $300. But at the end of the day, in the back of your head, the house will always win. You're going to end up losing all your winnings. So you need to figure out when do you stop.
Yeah. Well, a lot of these platforms also allow you the tools of risk management tools. So, if you're using Top Step X, he has it built right in. If you're using Trade they have it built in. I'm sure you can comment ULaw on other brokerage platforms that have the risk management settings. And we talked about this last class as well. Utilize those settings when you're in a clear mindset and thinking clearly, not in the moment emotionally. Think about what reasonable loss limits are for the day and reasonable profit limits are for the day. Okay. Because that's going to give you, again, it's going to give you guidelines. It's going to give you restrictions. It's going to give you accountability. And so utilize those settings. Please utilize those settings if they're available to you. Not every prop firm will allow that to be intermingled, but if you do have that available, like in Trade with some of the prop firms tied into Trade please use those settings, guys.
Also, managing revenge trading and loss aversion. This is me personally is one of the hardest struggles. Over the years of trading, I have like in the recent years, I learned that I have trouble with losing money or accepting my loss, and this is something that actually kind of made me downward spiral in terms of my trading career, where I don't know how to handle loss very well, but you just have to over time. I mean, some people are they're a little bit different. Sometimes some people can handle the loss like within a few months, within a few weeks. But for me, it took me almost a year or maybe 2 years to handle that loss. So that is something that you have to be comfortable with, and that's part of psychology. You just have to realize every time you trade, you don't get 100% or 100% hit rate. You have to be willing to accept loss no matter what.
Yep. And that's where the burn rate comes in that we talked about earlier, right? You have to be able to stomach a certain amount of losses. Well, if you go to a casino, one of the easiest way to limit your losses is only show up with X amount of dollars that you're willing to lose if you're going to go in a casino. Who are
Hmm.
the guys that absolutely devastate their lives? Well, it's the guys who go back to the ATM card 15 times and then they start getting out the credit card for cash advances. So when you guys have these restrictions, know that you establish these restrictions and establish this accountability for yourself in a place where you have clarity. You don't want to establish it in the moment when you're feeling emotional and revenge trading. Okay. So that's an important thing to think about too, is that when you think about risk management and creating guardrails for your life in general and for this trading, you need to do it in a mindset of clarity where your emotions are even keel and not high or low, because both the highs and the lows can be liars. They can be liars to you. So you want to be in an even keel, humble mindset when you establish, your overall profit targets for the day or risk management. You go and review your trading plan. You go and review your position sizes and go from your experience and be realistic.
All right, going to some questions. Emil asked, can you speak on what signals or what do you focus on to avoid from trying to short the top when you see the buy volume and momentum slowing down? So for me, I like to use Wix a lot, and I also like to use the trend. So if the trend, the market trend is going up like today, why am I going to short when there's no type of indicator that it's going to be a reversal? Uh, that's why I look for. I usually look for trend and also VWAP. If it's above the VWAP, it's going to be bullish. And if I see some type of confirmation candle where maybe on the 15-minute or 5 minute, I might reverse and maybe bigger wicks, then maybe I'll short. But other than that, until I get that confirmation, I'm not going to go against the trend. It's kind of like that saying, the trend is your friend.
No. Yeah. My personal answer is the fact that I utilize TraderLink. Okay, so I'm knowing about gamma exposures, and knowing liquidity levels in 15-minute swings where the market probably will go, where it's pointed on going. So that being said, um, looking for a reversal, if you always have to be careful. Okay, I've had a lot of great reversals in my day, um, and usually they come with patience. And a lot of times, what's going to happen is you will never hit it perfectly. So if that's your question, there's no answer for you. You're never going to hit the top or the bottom perfectly. It's rare. I've done it, a handful of times, and I do it periodically, but it's just simply rare to do. The best course of action is to wait for if you're in an uptrend and you're waiting for a short, is to wait for the market, let's say on a 5-minute chart, to start printing lower highs, lower lows. Okay. That's just basic trading 101, meaning that's a change in the character. It's not saying, oh, we hit this high a week ago, and we're going to take out this high and immediately reject, and I'm going to have the perfect entry. By definition, that is a total gamble. It's not actually trading whatsoever what the market is giving you, what the chart is showing you. It's just taking a blind long or short to counter trade. Now, as a general rule, how is counter trading the market working for you guys? How is it working for you guys when you short an uptrending market or vice versa? How has that been working out for you guys? It's okay. Please add that in the comments. My guess is those are probably the days a lot of times you will have a lot of losses. Didn't work until 342 today. Yeah. Chris, yes, that's something I will do, but honestly, I'm looking, one thing. Chris's question is an ICT question. And one thing that ICT does not take into account, I think we'll all agree, is gamma exposures. And gamma exposures are an important cornerstone of what happens in the overall market. And the reason is because we know that market makers and dealers collectively have billions at stake. They're not going to just, and we know that the algos have a certain rhythm and a certain thing that they look for. Okay. They're not just going to put it to chance. If you have massive exposure at a specific strike and nothing else is really standing out, there's a really great chance you're going to go to that strike if it's within, reasonable distance. And it's because these people have so much money in the market and they're constantly having to balance orders, puts, calls, longs and shorts constantly, that for them financially, they're always looking to hedge risk, just so you guys know. They're always looking to hedge risk. And so that's why they go to these positions, because these are positions where they can hedge their risk. They're constantly looking at their balance books regarding delta. What's their delta exposures? That's what they're looking for. And I don't want to get into a training about that. I'm just saying that gamma exposure is really, really important because it gives you a glimpse into the macros of the market every day, intraday. And it's a tool that TraderLink created. Mitchell did, along with Geo, but primarily Mitchell, I'm sure, has done the legwork. But that's a really, really important tool that I think could help you guys in your trading, is to just simply look where the market goes and wants to go with gamma exposure. Do not sell this short like this is some like an EMA, an EMA indicator or some like MACD indicator. It is freaking not. It is giving you a window into the mindset of potentially where the market makers want to go and want to reject. So if you don't have TraderLink, that's absolutely something I would recommend. Okay. So I look at gamma levels on a regular basis, and I literally talk about them throughout the day. If you listen to me talk on VC, I talk about them throughout the day. If there's changes, noteworthy changes, the type of behavior I expect price to be. And then I overlap that with my knowledge of fair value gaps, liquidity levels, and things like this. Okay. And so I combine it into this grouping of knowledge bases, and I work them together. I weave them together.
Right. Are there any other psychology questions before we move on to the interactive part? Right, going once, going twice. All right, so let's do something different. So like I mentioned, psychology, when it comes to trading, you will find out so much about yourself that you never knew. Um, I consistently find out about my personality and also my psychology almost every week. Um, so well, I mentioned, especially on the first slide, that trading is gambling. Let me go ahead and share a different screen. Where is my page? So you guys hear about like how like some they're saying don't trade if you're in debt, don't trade when you're either like emotional, while trading is gambling. So one thing I want you to do is either if you have a piece of paper or a pencil, or maybe just type on your phone or laptop. Let me see, gambler plus. So there are 20 questions when it comes to the Gambler Anonymous website. I'm sure you guys heard of Gamblers Anonymous. If you haven't, then you probably heard of like AA, like Alcoholic Anonymous, or maybe like Addiction Anonymous. You have all these support groups. So one thing I want you to challenge yourself is to try to answer these 20 questions and see exactly where you're at. So what we'll do is we'll go ahead and cover the 20 questions, and every time you say yes, make sure you jot it down. And at the end of the 20 questions, we're going to go ahead and see how many yeses you have. So let's go ahead and get started. So these 20 questions will determine, are you a compulsive gambler? So first question is, did you ever lose time from work or school due to gambling? Two, has gambling ever made your home life unhappy? Three, did gambling affect your reputation? Four, have you ever felt remorse after gambling? And what, and you can substitute gambling as trading. Five, did you ever gamble to get money with which to pay debts or otherwise solve financial difficulties? Six, did gambling cause a decrease in your ambition or efficiency? Seven, after losing, did you feel you must return as soon as possible to win back your losses? Eight, after a win, did you have a strong urge to return and win more? Nine, did you often gamble until all your money was gone? So substitute, did you often trade until your money is gone? 10, did you ever borrow to finance your trading? Kevin, do you want to do the last 10 questions, or do you want me to just go ahead and continue?
Just yeah, continue.
All right, 11, have you ever sold anything to finance trading? 12, were you reluctant to use trading money for normal expenditures? 13, did trading make you careless of the welfare of yourself or your family? 14, did you ever gamble, or I guess, did you ever trade longer than you had planned? 15, have you ever traded to escape worry, trouble, boredom, loneliness, grief, or loss? Or you can substitute that with like argument or stress. 16, have you ever committed or considered committing an illegal act to finance trading? 17, did trading ever cause you to have difficulty in sleeping? 13, I mean 18, sorry. Do arguments, disappointments, or frustration create within you an urge to trade? 19, have you ever had the urge to celebrate good fortune by a few hours of trading? And 20, have you ever considered self-destruction or suicide as a result of your trading? So go ahead and tally up all your yeses. And here, I'm just going to go ahead and do on the screen so you guys can see. Basically, if you have more than 7 yeses, then you are a compulsive gambler slash trader. And this is something that you do have to kind of like self-reflect and manage this, because what it is at the end of the day, if you don't manage yourself and manage your psychology, then you make go into debt, or you may actually dig a really deep hole. See, and go ahead and chat. Just tell me how many yeses you have, and you see right here down below, most compulsive gamblers will answer yes at least to some of these questions. Oh, wow, some of you guys are doing pretty good. So when I did this test, maybe a few months back, like last year, I had at least 13 or 14.
So what is it? Just out of curiosity, you it was 13 or 14 then. What is it for you now by comparison?
Right now, I think for me, it's more about like, I think if I did it, it's about 7 or 8.
That's
So
great. Yes, that's
I'm
a lot
still a
of
little bit
progress, man.
behind, but it is progress. So
Yeah, it is for sure.
the main reason why I want you guys to do this exercise is because I mean everyone's different, right? You're in a different stage in life, whether if you are trading to make money or trading for financial freedom, maybe to pay off debts, or maybe you have some financial struggles or whatnot. You do really have to be careful, especially if you have more than 7 of these yeses, and also if you're trading to pay off debts um, or maybe dig yourself out a hole. The reason why I say this is, I mean, real talk. For me, I've done trading for a while. Like ever since high school, I actually done like just stock trading, where I would just buy and hold and just sell whenever it's like either in profit or it's high. Uh, so like back then in high school, I bought Apple when it was $30. Then I sold it when it was like 200, $300. Or like when Bitcoin was at around like $3, I was Bitcoin mining. And I sold it when it was like 600 to $1,000 or $2,000. So I did in terms of the stock market, in terms of finance, I did pretty well. But ever since the GameStop days, I did really well on GameStop. I invested like I think $4,000 and had a return of $40,000. But ever since I got into options, then that's when it went downhill spiral for me because I didn't know how to handle loss very well. So initially, I lost my money, which is fine because like my money is something that I can always make up. But once I started like losing money that did not belong to me, or maybe I started like taking out money that I shouldn't have, and that's when it just almost forced me to hit rock bottom. And, like one of the things that really helped me is the position I was in. Sometimes different personalities. Um, some people need to hit rock bottom for them to have that clarity, and some people are like, "Hey, let me go ahead and reevaluate myself and think, what the hell am I doing?" Because especially when you're in that mindset where you're constantly taking losses and you're losing money, you do not make the best decisions in life, whether it's financial or life or whatever, or even work. Um, so that's why I really do stress that trading is gambling and psychology is really important. Um, but I mean, for me, I was at a point in my life where, I figured, hey, I need to change something in my life. And this is something that you may want to try if you're in that same position. To check out a Gamblers Anonymous meeting. There are virtual and also in person, and just hearing the stories of other people, whether if it's trading or whether it was like casino or like poker or maybe like scratch off tickets or whatnot, or even sports betting, uh, they kind of understand you because what it is there is no judgment in that environment, and it's that saying is like traders will only understand traders. Like if you talk to your like your loved ones or family, but if they don't trade, don't really understand exactly what you're going to. So that's why mental health is really important. So if you're ever having like a stressful day or you're just taking constantly losses back to back, take a day off, take a week off, get
Yeah.
that mental health and just reset yourself because that is really important.
And
This
to add to that, you all, I mean, trading is a lonely game, right? Well,
Mhm.
under normal circumstances.
It is
However,
lonely.
we have a community that we have that Mitchell and others started, 3 years ago, and that we are building and crafting here, with Rippy Global. And so we have a community of people that are there to listen to you, that are there to help you troubleshoot if there are problems, that are there to give you encouragement or support. I can't say this enough, guys. It's very, very important that you take part in the community and don't just be somebody, watching from a distance. You need people in your life that are going to be wise counsel. This is just in general, right? It's just not even trading, but in general, who are wise counsel, because we're always, as a general rule, a product of the 5 people that we're closest to. That's just something that's been studied for a long time. You may have heard it. And so think about that. If you are surrounding yourself with A, successful traders, and B, people who are positive mindset, encouraging, what does that look like in your life? How is that reflected? As opposed to you being on an island by yourself, huddled in your bedroom, getting your butt kicked in the market. Is there a difference? You better believe there's a big difference. And so don't ever think or minimize the power and effect of you reaching out to others, sharing your victories and sharing your defeats. It's okay. We have them all. We all have them, right? So that's really important that you do that and be humble in that, because um, you never know who's on the other side of that keyboard. You never know what they may be going through. Maybe it's, a lot of these things on this list. You never know. Okay. You never know what their circumstances are with their spouse or their kids, or, whatever, hospital problems or sickness or whatever. So that's why I'm trying to tell you guys is that this community is very, very important as far as I'm concerned, not only in your trading life, but just your general life, because trading is hard. There's other people here who share that struggle with you because trading's hard. However, we're here to share the victories with you. And you guys, some of you guys really need to celebrate your wins and not minimize your victories, even though your victories are small. That's one thing that a lot of people here need to do. And on the psychology front of things is speaking life over yourself. You're like, hey, it wasn't like the most profitable day. Don't crap on yourself just because you didn't have the most banger day ever. Okay. You know, how about I still took green. It was $200. I avoided this mistake this time. I recognized it. I saw it in the market. I avoided it. I didn't get too greedy. There's different things that people call this type of mindset, but at the end of the day is, you know, don't step on and crush your small victories. You need to identify them so that you personally, that's part of being a better trader too, is identifying your small victories, because guess what? Small victories over time give you massive results, life-changing results, and you don't even look like the same person a year from now. So that's one thing you guys really need to focus on. And for some of you, if not all of you, that needs to be something you journal, is those small victories. Does that make sense?
And absolutely. And also one big thing that I want to stress is don't compare your P&Ls to other P&Ls, because like I mentioned, everyone is in their different journey when it comes to trading journey. So, I may have like bigger P&Ls than most people, but that's because, I took the time and effort. I failed so many times. I mean, the amount of like evaluations that I actually failed, uh, it took me a while just to get where I'm at. So if you get like 200 P&L, $200 a day, that's a win because it's not a red day.
Right.
And the other thing is, like if you ever feel the need of like just need to like share or maybe just to like unload, just say something in chat. Discord, I believe everyone has access to the voice chat, not the staging portion, but the members chat or members voice chat, and you can just log in and hop in and say, hey guys, anyone available? Let me go ahead. I need to share or I need someone to listen to me. Whoever's available, I'm sure they're willing to hop in and just kind of talk to you a little bit.
That's right.
Another thing is I'm also trying to convince Mitchell to see if we can get this on a regular basis, like at least maybe once a week, where at the end of a market day, where we know we have a therapy session, so people can talk about how they're feeling, what they did during the day, the struggles, the losses that they're encountering, and like get that moral support because it helps a lot.
That's right. And going back to what I had said about the small victories, I'm gonna let you know a teaching that I was taught. I did not make this up. Okay, so I'm gonna keep it short, but give you a visualization. Somebody taught me to teach what's called to have what's called a Sprouts journal. Okay, and so what this is, guys, this is just you can do this throughout your entire life. It's not just trading. Okay, but what it is, think about a plant, right? You go and plant a plant and go and plant a garden. Okay. And you water your seed and it comes out of the ground, it sprouts out of the ground, and you start seeing the first leaf, right? Of things to come, right? Does that make sense? And then what do? You stomp on that sprout, or what do? Do you continue watering it, fertilizing it, and whatever? So many of you and many people in the world will stomp on the sprout. The sprout is the little victories, the things that you've identified that you made progress on, that you've been stomping out and killing. So think about that. Small sprouts, what happens on an oak tree? It's a small sprout, right? But what happened if you kill that oak tree? It's never going to be an oak tree. But what happens if it grows? It's a live oak that lives for hundreds of years and it's massive. Okay. So that's the training that I went through a long time ago, and it's a great visual. Do not stomp on the sprouts, and the sprouts are the new growth that you have made, both as a person, and this is a trading platform, but as a trader. Okay. I didn't do FOMO today. I sat on my ass and watched the market pass me by. That could be another victory, right? I didn't revenge trade. I wanted to so bad, but I didn't. I didn't counter trade for the seventh time today. Counter trade the trend. I didn't size up today. I paid attention to size and I'm good with the win. I paid attention to the overall trend. I waited for a pullback. I took $500 and that was good enough. These are all like little victories. These are all things that you guys need to celebrate. And before you know it, you're actually in a positive mindset versus a self-destructive mindset. Does that make sense, guys? Is there
Say, Mark.
anybody here who has been crushing their little victories over and over and over again? It's okay. Just admit it. Is there anybody here who is like, it was only $200. Johnny over here or Kevin over here made $7,000 today or whatever. It doesn't matter, whatever it may be. Comparing yourself to other. Have you ever crapped on your small victories for the day that you should have identified? Right. So think of a parent too. Think of a parent like a good parent. Not everybody's parents are different or the same, but a good parent. They see their kid, do something like tie their shoes. Do you think that they celebrate the kid tying their shoes? Yeah, right? Like, wow, great job, Johnny. Great job, Sally. It's okay, guys, for you to celebrate the small stuff for yourself, just as though you were a parent talking to your child, celebrating the small things, the small victories. There you go. My small victory has been not buying 5 Apex resets a day. That's awesome.
Yeah, that is awesome. Like
That's
I
amazing,
remember.
right? That's a huge victory because those are, 100 to 150, whatever it may be, $200 a day. Okay.
Mhm.
That's a victory. I sized down drastically, still only trading options, but I've been taking 20 to 30% wins with 20% stop loss. So you have a stop loss in place now. For some people, having a stop loss at all is a freaking victory. rather than just letting their their trade go to zero. Having a set percentage that they're willing to take profit on, whether it's a percentage or a certain dollar amount. That's a victory. Yep. SRP. Absolutely, dude. Absolutely. So that's something maybe you guys tonight, maybe you guys can write down. Like I said, the sprouts, if that's a good visual for you, the sprouts, um, the small victories that you had today. And a good exercise is to write 5 down every day, not only for trading, but it can be in your general life. Like, wow, I cooked a home cooked meal. I got out of bed. Whatever it may be, everybody's different, right? I went to the gym today. That's a great one. Okay. I didn't eat fast food all day. I just ate it for 2 meals instead of 3. Whatever. So it's like these are progress things. And before you know it, your progress turns into massive progress. Think about this for the gym. Well, I went today, but I still haven't lost that 50 pounds. Well, what happens if you go again, 2 more times this week? Like, okay, I lost a pound or two. What happens if you do it for a month? Celebrating the small victories, and then you end up losing 50 pounds in 6 months or whatever. That's people so much focus on the huge, like, end of the tunnel and like the destination and the finish line, like, I'm going to be a millionaire or whatever. Instead, they didn't realize that they missed all the steps along the way where they were patting themselves on the back, where they were celebrating the small stuff because they were too focused on the very end and they weren't focused on the actual process of risk management, on the process of controlling their emotions, on the process of not chasing things. That's all part of this, guys, every single day. But celebrating your victories is really, really one of them. Focus. You tend to get more of what you focus on. You focus on the bad things, you get more bad things. And that's how you spiral. You focus on the good things and you get good things. That's usually how life works out in general. It's because we have a mindset that attracts us to more of that thing.
Yeah, I totally agree because trading is definitely, like I mentioned, it's a journey, right? I mean, if you want to use analogy, think of it as an RPG, right? You're when you're creating a new character, you're starting off as level one. Then you have to grind to all the levels, put in the stats and everything. So I mean, there's no game where you jump from like level one to level 100. So that is something that everyone
Yeah.
has to work on. I mean, it's like working out. Initially, when you start working out, you can only maybe like lift, let's say 10 pounds. But as the more you work out, then you can start increasing it to 15 pounds, 20 pounds, 30 pounds, etc. So
A great analogy.
but that's one thing I do challenge, or maybe you could consider as homework, is yes, set those limitations. Like for me, while I was doing prop firms, especially starting off, like I know one person was saying, I limit myself to 5 resets a day, or I no longer resets 5. I used to blow like 100 accounts in a day because I was group trading 20 at a time. And
Yeah.
for me, what I started doing is once I started realizing this can't keep on going, then I start putting restrictions like, hey, I need to let's make a goal where I don't buy accounts or reset the accounts for at least at most 20. Or maybe like let's focus on getting this valuation to like at least surviving 1 week. So it's just milestones. You slowly increase them as you hit them. And there's no person in the world where they become like a ultimate trader and they just become um like a goat in one day. I mean,
Yeah.
it's a slow grind.
Mm-hmm. And the
And
and the and the things you learn add up over time, right? I mean, it's like
Mhm.
you pick up things just like people in this room. I pick up things from things you're saying. And so, you pick up things from my saying, and we're in the Discord and we're picking up things from others constantly. And
Mhm.
before you know it, you become a well-rounded trader who has risk management, self-control, all these things. And before you know it, you're like, trading just got a lot easier. Like it used to seem like it was an impossible thing, but wow, it just got so much easier because I have all these things that have lined up over time.
Right. And to get started, in case of you guys aren't familiar how to, or like maybe confused how to get started. So consider this as homework. Maybe like before the market opens, um, you know, look at the chart, see what type of trading plan. It could be as simple as, hey, I'm going to use this level. If it touched the VWAP or it touched this level, I'm going to take a bounce. If it breaks below, then I'll go short. Then once you have that trading plan, then go on your evaluation or maybe like simulation count and just take one like micro, whether it's ES or NQ, MNQ, and um and go with that trading plan that you developed. Then and make sure you have profit targets. Then and do this like 10 times. If you have like a net profit of like in the green, then you can slowly scale up to like two micros. Then do that for 10 times. And if it's like overall net profit, then increase it to like three micros. So once you start doing this, then you'll build that confidence and you'll build that habit of, hey, I'm going to fine tweak my trading plan. Maybe the last 10 times it didn't work out too well. So let me go ahead and maybe change something up. By
Yeah,
doing
and a
that,
trading plan
you
is constantly evolving, right? It doesn't have to
right.
be set in stone.
Yep.
It's constantly evolving. Well said, man. Oh yeah, and also, guys, I don't want you guys to confuse prop firm when you just do straight up paper trading. Like on your broker or whatever. You have absolutely nothing, no skin in the game, nothing. You're not paying attention to any um entries, or you may walk away from a trade and whatever happens happens. At least you know, with prop firm trading, there is money, there's actual money on the line. It may be $50 or $100, but it's still real money and it's still real skin in the game. So if you need to trade 1 minute micro, that's cool, man. It's just get used to it. Get started and do the prop trading, because that is actual still money you have at risk overall for that account. And something happens in our brain where we treat it differently. So just make sure, like you said, if it needs to be one micro, that's cool. You at least you're in the game learning, and you're doing it for something that actually has something tied to finances. So I encourage that whoever's like on the fence or whoever's just getting started, just push play, just push the buy or sell on a small, contract, micro contract, just so you can see it move and figure it out.
All right. There's a question in chat. Ruben says on MNQ, if you buy it and it moves up 20 points, how much profit would that be if it's just one MNQ? That's actually just $40. So this the way I like to see it is I do it by points. So for every 10 points for NQ is $200. So MNQ is just um basically 1/10 of NQ. So if you have two of them, then it's 40. If you have one, it's 20. So if it moves at 20 points, actually, if it moves to 20 points, yeah, it's 40. Yep. So you'll just make $40 off of one MNQ.
Yep. Okay. Any more questions, guys? Do you I know we've talked about a good amount. We've been here for about an hour 45 minutes. I'm sure Mitchell's going to um love clipping this together and editing it. So you
I
guys
said
feel as
no.
though we missed anything that you wanted to touch on?
Yeah, even if you don't think of a question now, maybe something later, just feel free to ask us in either in the channel or DMs, whatnot. Um, Preferably, I would like you to post that question in the channel, so that way at least other people can see it and it'll be more beneficial that way. But if you are feeling a little bit shy, then definitely use DMs.
Neil, is any prop firm better regarding payouts? Do you mean better as far as their reputation getting you payouts, or do you mean as far as ease of getting paid?
or frequency.
Yeah. You Law, you can tackle that one.
So I would say if you want to do like frequency and also reliability and ease, um, Take Profit, Top Step, uh, and Linux, they're pretty good. If I had to pick two out of the three, then definitely Top Step and Take Profit. Take Profit, as long as you hit max drawdown on your funding account, you can withdraw daily. Uh, Take Profit, that's Take Profit. Top Step, as long as you do a minimum of $200 a day for 5 trading days, then you can request for payout. Um, and I think they do take like 1 or 2 business days for them to process that.
And so, but as far as like speed of time, also to pay out. So let's just say best case scenario, to a payout is going to be typically is going to be 6 days with um, take profit, 5 days on the front, 1 day on the back if you have a winning day on the pro account. Top step's going to be 7/8, meaning if you perfectly do things on your profit in the combine, you can pass it in 2 days, but sometimes you need to do a little extra on that third day. So they're 8 roughly. And then also, but Apex is best case scenario, 11 days. So that's one thing that you guys can also think about regarding your payouts is if things go well and I have a great week trading and things go, what's the best case scenario? You know, and Bullinox and others, I'm certain that they're probably somewhere around that too, 7 to 10 days.
I would have to say Apex is probably one of the slowest in terms of payout after request because the payout window, request window that they have from 1 through 5 and 15 through 20. Then after that, once they approve it, then they usually do pay you out around like the 15 or 20 mark, or 15 or I guess the 30 mark. Um, and someone mentioned about my fund of futures. I can't really tell you on that because I haven't like personally traded with them. But if you look in their frequently asked questions, I'm sure they'll cover it.
Yeah. Let's say if Playboy was in here, you'd be able to comment on my fund of futures. Playboy would be the one you'd want to ask about them. I've never used them, and I don't know that he's in here anymore. But you can ask Playboy about my fund of futures.
All right, any more burning questions? Chris asks,
Um,
how do you pass an evaluation on top stuff in 2 days with 50% rule? Does it have to be exact?
yes. So they give you a little bit of leeway, like not a huge, like so. For example, $3,000 on the 50K account. I set my profit target to 1525. Okay. I do that because there's also commissions and stuff like that. And so but there's also slippage and stuff like that too that happens. And so in dealing with that, I like to say it's just above, you know, 1500. It could be 1510, for example. That way to where their system, when it actually kicks you out of position, taking profit, that it's going to be roughly $1,500, to maybe 1510, 1520. Now their system, I don't know that it goes down to the penny. But a lot of times what I will have to do, it'll be the 2 days, and then like that third day, I'll have to make like $50.
Also, to add on top of that, so you can do it in 2 days. I've done it multiple times.
Yeah.
They do have a small margin of error, so to speak.
Right.
So let's say, for
Yes.
instance, if I made a little bit more than 50%, like let's say 51%, maybe
Yes.
a couple $100, your system will kind of negate that and take into account within that small margin error.
Yeah,
Um,
yes, that's done it for me so many times, you law. Is it's like that's why I do 1525 or even whatever 1510 to where it's just, the commission's accounted for and it's as close as I can get it to 1500 in that account.
there's another one is are there new promo codes for Top Step? No, there aren't. I mean, the Top Step you rarely get promo codes. If they do offer promo codes, usually it's like evaluation resets, and that's something you have to kind of watch their Upstep TV and get those fire drill codes.
Yeah, I'm working on it, but Top Step is like they've been slow. They're so great on a lot of things. What they're not great on is like wanting to help us out as a group with affiliates and stuff like that. They're just not. Whereas Apex is different, and they make affiliates easy and whatever. But Top Step is also redoing their program. So it's my hope that I can work some sort of deal for you guys. And Top Step, based on what I know, you can comment on this longer term. But when they do a promo, it's usually a set dollar amount off. It's not a percentage. So for a while they were doing a $30 off, and it's a $30 off any account. And so your 50K accounts were only $19, but your 140, your 150K accounts, which normally cost I think what 149, those
Yeah.
were like 119. So it was only the same. It was a 60% off the small guy, but it was like 20% off the bigger one. So
Mhm.
they like doing flat rate discounts. Top Step does.
Yeah. I mean, if you're trying to wait for like trying to time that next discount, I wouldn't hold your breath because they rarely do it, and if they do, it's not really that much of a bargain. So
Yep.
if you are trying to try out Top Step, then just give it a try. Don't wait for like any type of discounts because likeliness is not. I mean, for them to likely have a discount code is very very rare.
Yeah. And Apex is all relative, right? They have their, it's 80, 90%. And the reason is if you go and look on their website, and you look at their quote unquote retail rates for these accounts, it'll be like $400 a month or whatever. And nobody's going to pay that. Okay. So it's just a sales tactic, is all it is with 70, 80, 90% off. That's just a sales tactic. That's all that is. Take Profit Trader is very interesting. They have some pretty nice promotions. So don't look past them. I cannot comment on the others, but I will say that they have some really nice promotions that they've had. And so, but they seem to have a consistent promo ongoing. It's just, it depends on what it is. Sometimes it's different.
Yeah, for take profit, I would say the cost is about the same as Top Step in some ways. So
Yeah.
if you had to pick between the two, it really comes down to exactly what you want. But yeah, take profit does have some pretty good promos where I think last time it was like no fee 40 where you pay 40% of the evaluation. Then if you do pass it, then you have to pay for funded account, right?
Yep.
Funded activation. But now I think they got
Exactly
rid
right.
of it, and it's where I think it's 50% off for the evaluation. And if you do manage to get funded and pay that funded fee, then also manage to get a withdrawal, then they'll reimburse you the evaluation fee.
That is correct. That is correct. They'll add it to the withdrawal.
Yeah. And I know Top Step did do that, but they got rid of that program where if you were able to pass the evaluation and also get withdrawal underfunded, then they'll give you $150 of the activation fee, but they no longer offer that anymore.
Yeah, but these guys have new promos all the time, and they're thinking about internally, marketing. It's just like any other business, right? And so the
Mhm.
promos are going to change, from month to month. And so like Apex's promotion this month isn't that. I mean, 70% off isn't nearly as good as 90. I mean, you're talking about a $50 account compared to 20. They have the $85 um one-time funded fee, which is great. That's good instead of the monthly funding. But there's months where you can gravitate to other prop firms simply because some have better deals than others, or there's times where you can load the boat on a certain prop firm because they just have such a smoking promotion that month. So just figure out who has the better promos, and make sure you like the rules, and you know the rules and know how you need to trade within those rules.
Right, any other questions before we call it a night?
Awesome, guys. Well, thank you guys for sticking with us for an hour and a half, or I should say an hour and 50 minutes. Excuse me. Um, we really do appreciate you guys coming on, and hopefully everybody that catches the recording appreciates everything as well. Ruben, glad you thought the class was great. Hopefully these three sessions will stand the test of time and offer a lot of value for folks, because some of this stuff is timeless. And so I appreciate you, Eula, for taking the time. And so, guys, you should be clapping for Eula as well in creating the slides, especially in the first one and in the second one. But yeah, so he's put in a lot of effort into doing this. So please do not let that go unnoticed. So give him some love on Discord. And if you guys want to get these prop accounts and you haven't gotten them, both Yula and myself, we both have links, affiliate links, and that's a way, we get a referral for that, and that's a way of saying thank you to us for the time we put in. And so you can support him or me or both. It doesn't matter. Knock yourself out, do whatever you want to do. But please do that. Please make sure if you open accounts, utilize our links because that does help and shows our appreciation in that.
Yeah, have a good night, guys. Thank you for taking the time to join us.
Thank you guys.